Equity Bank has continued to register impressive performance in the backdrop of a downcast global and domestic economy. The bank posted 9.09 billion shillings pre-tax profit for the 9 months ending September this year. This is an improvement of 39% over a similar period last year when the group recorded 6.5 billion shillings profit. Speaking during the release of the bank's third quarter results at an investors briefing at Equity Center in Nairobi, the CEO Dr James Mwangi attributed the significant growth to staff motivation that accounted for high productivity and a robust business model.
A growth of profit from 6.5 billion shillings to 9.1 billion shillings, a 39% growth of profit before tax, and profit after tax growing from 5.1 billion to 7.3 billion, a growth of 42%. What has driven this performance? The first one is the productivity of our staff. We have seen productivity not just in growth of the business, but the quality of the business. And I want to take this opportunity to really applaud the staff of the bank for that enormous enhancement of their productivity and the high morale and motivation in the bank that makes people have a good feel effect.
Dr. Mwangi further attributed the impressive performance to the benefits of economies of scale arising from size and growth and improved quality of the loan book.
Equity is entering these turbulent times from its best position. We have never looked this good in our history. And again, this has a lot to do with the brand, and that's why you find huge investment in refining the brand.
In line with the growth, Equity's sustained marketing efforts under the bank's Equity Ndio Hii Hapa nationwide campaign resonated well in the market, with the customer base rising by 19% to hit 6.7 million. The increased customer base corresponded with increased deposits by an even larger margin of 51% to 149 billion shillings. This increase is attributed to the new equity agent banking channel that is mopping up funds from the public.
And we can see the month of September alone, we jumped from 5,600 in August to 734,000 transactions. From zero to 700,000 transactions. I'm happy to say in October, we have already predicted we'll cross the million transactions, simply because Equity Ndio Hii Hapa campaign has really now created the confidence that the customers wanted, and the transactions has almost doubled at the agency level.
The exemplary performance was achieved in spite of increased inflation arising from spikes in fuel and commodity prices. Indeed, the resilience saw the Equity brand shine ever brighter to be recognized as the most impactful brand on Kenyans' lives.
The growth of Equity is substantially attributed to two things: to the customers pursuing a superior brand, and in the international community, a reputed brand in Africa. And so it becomes easier for whether it's China Development Bank, whether it's IFC, whether it's FMO, whether it's KFW, whether it's DEG, we are able to get global loans at very, very competitive rates because of our brand.
Equity Bank's good performance comes at a time when the bank has been fitted for its intervention in small and medium enterprises, SMEs, and agriculture. At the close of the third quarter, Africa Investor recognized Equity Bank as the best initiative in support of SMEs and the Millennium Development Goals.
The best performing in the top 40 companies in Africa. Again, Equity is the best performer. The World Economic Forum naming Equity after scanning 11 million companies as the only sustainable financial system in the emerging markets. And of course, the African Banker again for the second year. This has helped us to maintain our relationships and to be rated the way we have been rated in the past.
And what does the future hold?
Who finish the race with the same momentum. So predictions are that the fourth quarter will be better than the third quarter. That's what we feel. All perception agency is peaking and peaking very rapidly. Mobile banking is peaking very rapidly. The quality of the loan book, we can confidently predict will be better than it is as at 30th December. And so we see, even if we maintain the current interest rates, we should be able to deliver a better performance than for the third quarter.